Neeraj, what else are you spotting in the market?
Well, interesting. So, yeah, those are some interesting charts, and we'll talk about some of those stocks as well. But clearly, that one stock that you guys were talking about, Bajaj Finance, certainly looking like revving up. It's amongst the top gainers on the index today. Should pull up that stock 8% higher and counting. So, really good show being put up by Bajaj Finance in the session today. That aside, just pull up Bajaj Auto. Somehow it's not having a great day. Bajaj Finserv too was amongst the top losers in today's session. So the Bajaj trio, and different families of course, but the Bajaj trio is kind of hogging the limelight today. But Bajaj Finserv has recovered a little bit of loss ground, but Bajaj Auto clearly down about 4.5% in trade. Yes Bank is now at 204. So that whole rally all the way to 250 and getting to about 1.4, 1.5 thereabouts, slightly over than that in terms of valuation. Now pulling back for Yes Bank. Grasim is down about 3%. Adani Ports about 2.5%. Not the best of reactions to its numbers. Bharti Airtel, strong show, and all marketing companies, strong show. No surprises thereof. Amar Singh of Angel Broking with us on the show as well. Amar, good afternoon. Thanks for joining in. How are you approaching trade on the benchmark indices right now? If one were to be wanting to trade the Nifty or the Nifty Bank for the current expiry, what would you advise?
I would say that overall what we are seeing is that weakness definitely persists in the indices, because at higher levels again we are witnessing selling pressure also. If you look at today's movement from upside, there was selling, but what we are seeing is that downside towards 10,100 that is acting as some sort of support, and there is some sort of bullish divergence happening on both the indices, wherein Bank Nifty is better placed as compared to Nifty. So I would say that still the trend being, I would say intermediate term trend being extremely bearish. So that's the reason any pullback will be used as a shorting opportunity. So the levels to watch out for if one wants to go short at higher levels is somewhere around a pullback towards 230, 240. That can be a good level to short. And the stop loss above 300 levels, and a target of 10,100 on the downside. Because Nifty continues to be bearish, and I would not go for a buy in this market right now.
Okay. Amar, what about specific stocks for the afternoon?
I would say among the specific stocks, the first one to look for is Z Entertainment. What we are seeing here is that Z has did bounce back from almost 400 levels to 470, and then again it is correcting. And technically it continues to be bearish on the charts. So long-term charts are also extremely bearish, and short-term, yes, it is showing some signs of, I would say, consolidation, but still I would say that going with the flow is a better option. So any pullback in Z Entertainment towards 435, 438 levels, that can be a good level to short, with a stop loss of 447 and a target of 419 on the downside. And the other stock to look at is TCS. TCS is, I would say, on the buy side. What we are seeing in TCS is that TCS is very close to its crucial support zone, and it is continues to be strong on the long-term charts. On the weekly, yes, it is in oversold territory. On the daily, it's weak, but there is a possibility of a bounce back in TCS. So any TCS can be bought at current levels with a stop loss of 1809 and a target of 1937 on the upside.
Okay. Okay. Manav, you shared with us your ideas. Maybe you want to share the levels that one should monitor.
Of course. So at the current levels, Axis Bank look good. You know, we were just discussing it has important support around the levels of 550. The stop loss for longs would be at 545 on the lower side for an upside target of 600. From the pharma, Cipla is very well poised. You know, it has given a breakout on the monthly charts, and you know, it has forming a good base formation, a stop of 590 on the lower side for an upside target of 680.
Interesting. Okay, let's get in a fundamental view going on the show as well.
Today.
Sorry?
Said it's houseful today.
It's houseful today. It's houseful today. Is it the movies also releasing? No.
No.
Okay. No. Bad one.
Thank God for that.
Okay. Gurmeet Chadda of Complete Circle Investments with us on the show as well. Complete Circle Consultants, excuse me. Gurmeet, good having you. Thanks so much for joining in. There seems to be some bit of separating of the wheat from the chaff. All NBFCs are up, yes, but the ones which have posted stronger numbers are bouncing back strongly. Bajaj Finance, a case in point. A couple of others have done reasonably okay, but Finserv has bounced back from the lows,
yep.
But not everything is doing well.
Yep.
And now that we've had a chance to analyze what companies will do well, what companies won't do, is there are you making recommendations to your clients to get into that pocket? It's a bit of a minefield out there.
Yeah. So, Neeraj, I think the quality names, yes, but as I said earlier, very gradually. I think the arbitrage trades are out. NBFCs which were using arbitrage, so let's say an India Bulls or a Diwan Housing or even an Hdfc or an REC, they were all borrowing at the same rate, 830, 840 about 3 months back, which wasn't fair. Now they borrowing at 10.5 is also not fair. So I think some normalization will come. We've already seen, I was speaking to some CIOs of debt funds. A minor tap has been opened for CPs because earlier the liquid funds were a strict no for CPs. So I think the ones with retail franchise, granular deposit base, so let's say Hdfc Limited has 1.8 million depositors. Bajaj Finance, we saw how the retail deposit base has picked up. So anyone which can demonstrate growth, granular retail franchise, I think is something which one should use. But as I said, once there is a storm, you should not try and be too brave about it. Just gradually get into it. If you find some mouth-watering valuations, say something below 2,000 for Bajaj Finance or below 5,000 for a FinServ, or even Hdfc around 1,600 levels, I think you can gradually add, because when the fear strikes, it has no level, but the behavioral finance comes in. You then are not able to buy the right quantity at that price. So gradual buying is what is recommended. We are saying a interesting 40-40-20 thing. It's just 40% till state elections, 40% between state and general elections, which is till May, and 20% cash in case something globally doesn't go your way.
Sell out 40% of your portfolio or invest 40%?
The additional liquidity, obviously.
Today, housing finance companies also actually are doing okay for themselves. So Canfin Homes, Repco Home Finance, these are stocks which are up close to 9%, almost 10% for a Canfin Homes. Repco Home Finance is up 4.5%. So within the NBFC pocket, is this a likely good enough space?
Yeah, so Canfin also, because of the results, I think had a very good set of results. Also, I think there are talks of RBI easing some, probably giving a separate liquidity window. We've seen government officials talk about giving relaxation in few norms. So I think it's a combination of some good results in this and some liquidity support coming from the regulator.
Would you trade on a Canfin at 243, Manav?
Yes, in fact, for a very short-term perspective, Canfin Home since last 10 days, it has been forming a good base support around the levels of 220. Last 2 days, volumes has been above 50-day average volumes, which is indicating some sort of a reversal formation at the lower levels. Once if the prices closes above 250, I think a very sharp move towards 280, 290 will not be ruled out. So at the current levels, one can definitely initiate long positions, keep a stop at 225 on the lower side.
Amar, the cement counters, the likes of an ACC, Ambuja, what would you do with this space as a whole right now? And is there any particular picks from this space, even in the mid-cap side?
Looking at the cement stocks, I would say first talking about ACC, it continues to witness selling pressure, and technically it continues to be bearish on the chart, but ACC on the downside has got extremely strong support coming in the region of 1320, 1350. So there is a possibility that the stock could bounce back towards 1430, 1450 levels. But otherwise the trend still remains down. And looking at Ambuja, if I look at Ambuja cement, what I see here is that this stock is also continues to remain bearish. But this is, I would say, here the selling pressure is there. And the stock has got some support around 190 odd levels, but overall I would say rather wait for getting into the cement stocks, because still there is further downside to the stocks, and it could consolidate, because if for example Ambuja cement breaches the 185, 188, 190 zone, then it could head significantly lower. So I would say rather one should wait for some consolidation here.
There's a bit of there's a smart pullback, of course, that's happened in the oil marketing companies. So while they got beaten down, HPCL, for example, to 170, 175, from there to about 235, that's a remarkable pullback for somebody who managed to be a brave heart and park money in at those levels. I think you were just discounting the marketing business completely at maybe 200. At 170, there was just a bit of a distress out there. Look at that bounce that has happened into an HPCL from those 165, 170 odd levels. Similarly for a BP, similarly for an IOC. And today's gains, of course, add to some of those some of that movement to HPCL. Incidentally now toying around with Bajaj Finance for being the top gainer on the Nifty. Before we get in a chart view, Gurmeet, fundamentally for the Braveheart, maybe it was a no-brainer at 170 HPCL or an IOC at low levels. This 30-35% uptick from those levels. What do we do here now in the oil marketing companies?
See, I mean, still at this price, it's less than book value or closer to book value. And so you have to have a view on oil, over a tooth. So on a medium,
which is difficult, right?
Yeah,
which
is
very
difficult
to have.
But Neeraj, if you take a short-term view, it's difficult. But if you really were to plot oil on a 3 to 4 year basis and think of the current spike in oil, it's largely because of the disruptions, whether it was Venezuela, Iran sanctions. It was not really the demand supply. We've seen US inventories rise. My sense is that avoidable for a month or so till the oil settles. It's below about 75. I think around 70, 72 is when that 1 rupee absorption and the inventory loss will probably kick in. So if you see further, it could be a good trading call for now. You can watch oil and then intraday charters can tell you. Fundamentally, I think maybe a month away, and if oil settles around 70, 72, see, mind you, both HPCL and BPCL, the ROE is 25%. HPCL is also a lube-based, the largest refinery, which is a lubricant-based. It's a great marketing infrastructure. So it's not that everything is only linked to the margins as such. So once it settles down at a equilibrium, whatever that price is, and that's the time to really get into it.
Yeah, I think the worry is probably that everybody knows that the businesses are moats, and maybe we'll get Manav in to look at those charts as well, maybe crude or maybe actually OMCs and how they're looking on the charts. But everybody knows that the businesses are great. There's a moat around the business. Nobody's going to come in. Sure, BP and RIL may start off 2,000 pumps, but that's some time out, right? Yeah. So the business is there and secure. The government intervention kind of brings about that little bit of a hassle. So that's the only concern. But Manav, you want to come in on the charts? And frankly, as we speak, Bajaj Finance is really taken out 9.3% now at 2275. Big gains out here. But we're talking about OMCs, BPHP, IOC. Does anything look good for us?
At the current levels, IOC definitely stands out, for a simple reason that the prices have formed a very good higher bottom and eventually has also exceeded its previous high. So it has formed a short-term rising channel formation whereby the stock is eventually likely to test the levels of 148, 150. If I look at the crude charts, somewhere we have seen a good top out for at least a quarter or so, and I don't see crude testing the levels of 75, 78 on the immediate basis. Also, the crude has formed a double top formation with series of negative divergence. So when such kind of a formation happens, usually at least a quarter you can expect a sideways to a negative consolidation on the downside. So keeping that in place, and the overall scenario, I think one can take not a 1 week view but a good positional view for at least a week, 2 or 3 weeks on the OMCs. IOCs would definitely stand out.
All right, that's the oil marketing pack. Just want to pull up an Eicher Motors. The stock, while obviously on an absolute basis right now was up just 1%, but the stock has seen a move from the lows of the day over the last few minutes of trade at 22,000. Though the stock has come off significantly on a year-on-year basis. The stock's down closer to 30%. It was trading closer to 29,000 odd from where it went down to 21,000 and has just about come back up again. But is there a likelihood of some interest building up in this counter?
Actually, the stock has seen a very sharp decline, and on the structure basis, it has violated important weekly and monthly supports. When such kind of a formation happens, you may see a very consolidative move or a short-term rising move ahead, but I don't see very aggressive buying coming back into the stock. We need to see a good base formation happen. There are stiff resistance in Eicher Motors close to 23,500, 24,000 odd levels. So there is the upside is capped. I would want to keep this stock on the bay, but if I have to pick something from the auto packs, I think M&M would be the stock to look in for. The prices have seen a good decline. It's near the important monthly support channels, a good risk-reward ratio. Will not be surprised to see the stock see a very good outperformance of at least 10% in the near-term perspective.
All right, that's an M&M preference over Eicher Motors. But within the auto pack, Gurmeet, what do you favor amongst the two-wheelers and the four-wheelers?
See, I think we have had a transient phase where people are assuming the transient phase and comparing it with a slowdown. You have raw material costs, there is an oil shock, there is a deferment. Yeah, so I think everything has gone wrong. For Eicher, there was a small disruption in the plant as well. I don't think so. There is an issue with the fundamental story. So I would prefer, a Bajaj right now over, despite the average results, followed by Eicher. Eicher, I think we are totally ignoring the Volvo CV piece. If you see, it's the second largest medium duty truck maker. And I think that business seems, the CV cycle is seeing a fair degree of uptake. We have had 2 launches of even on the Royal Enfield platform. I think it will take a month before we get the real feedback. This time the launch has been more calibrated after the failure of the Himalayan brand. So, so Bajaj and Eicher, gradual accumulation again, just let this transient phase, span out. I think Dhanteras would be a good trigger. That's when you get the biggest two-wheeler numbers.
Yeah.
Last time Hero Honda sold some, if I'm not wrong, some 1 million bikes on that day. So I think you'll get a better, whether the festive season is really, affected or it's been a bit of a lag. And a deferment because of the same.
There has been a lag for sure, right?
Yeah.
Hormuz that day was telling us that his conversations his conversation with auto companies seem to suggest that all has not been thus, at least until the 18th or 19th of October, wasn't the best.
Yeah.
Now let's see if there's a pickup there. But let's wait and watch what happens to those pockets. The other one, which has bounced back very strongly today, is Bharti Airtel. That stock is up about 6% now, 302. They found suitors for 6 investors, which will pour in about 1.2 billion for their Africa business. Gurmeet, small shot in the arm, is it big?
I think it's a trigger. It's not really big, Neeraj. I think because telecom has been, battered. I remember telecom having more market cap than pharma in 2007.
Sometime
right?
back.
So I think there is an interesting study with Inam has done, and I'll try and see if we can get hold of it. They say that if 1 paisa per GB, price goes up in the data pack, which will happen since now there are 3 players, the industry profitability goes up by 900 crores. So, and if Bharti has about 35%, still market share, that could translate to, again. So I think some point of time, the fight on the usage will, it's become a content base now. They're fighting for content tie-ups, which we discussed. I think some point of time the pricing power will come. Difficult to say. So I would not, in this kind of market, I would go with something with visible earnings right now rather than betting on when the pricing power will come. But when it comes, it may not be even bad idea to, get onto the, because the upside could then be quite significant.
Interesting. Amar, do you trade Bharti Airtel?
Yeah, looking at Bharti Airtel, what we are seeing on the daily charts is that the stock is forming a bottom and close to 275, 280 levels. And also other indicators are clearly showing that maybe the stock could bounce back. But again, on the higher side, if you look at it technically, so there is a possibility that the stock could rally towards 325, 330 levels. And the short-term bottom seems to have been formed for this particular stock.
Okay, that's Bharti Airtel. Should pull up another stock, Graphite India. The stock up until a few days back had 5 or 6 straight days of upper circuits, which is open now, and in fact now the stock almost on a daily basis has been seeing a decline. Today the stock's down about 4%, but if you see on a year-on-year basis, the stock is giving you returns of closer to 104%. So the stock is really, in fact, doubled in terms of their the pricing performance. Manav, what's the sense here? How would you in fact trade this stock at the kind of prices?
No, in fact, I think it's time to, if you're making good profits in it, it's time to get out of the stock. Simple reason, the price has formed a very strong lower top formation to its previous high at 1150. So there is an early signal of a change in the overall structure, and the prices have also breached its important weekly support. I think on the upside, 950 to 970 would be a very stiff resistance where some selling pressure is likely to come, but it opens the lower gate for the stock to test the levels of 800 and even much below. So there is much more of a downside into the stock, and we've seen the stock being quite volatile in nature. So when it comes for the stock to, once if it breaks the support, you may not even get time to exit. So this is the good time in case if you're making some profits, move out of the stock.
Okay, that's Graphite India. Anything else, Amar, that has caught your attention in the last half an hour of trade?
Yeah, one can look at LIC Housing Finance. If you look at LIC Housing Finance, this stock continues to be on the sell, and today it has also corrected. And technically, if you look at it on the intermediate as well as the long-term trends, that continues to be bearish. So any pullback in the stock towards 413, 415 levels, that can be a good level to short with a stop loss of 427 and a target of 385 on the downside.
Okay, let's look at some other stocks which have bounced back and bounced move up in the last few minutes of trade. Actually, Oberoi was anyways doing well, and I think it's inched up further. So do look at that stock. That's about 8% higher, and just a bit of a spike in the last few minutes of trade. Astra Microwave has some gains, but okay, ignore that. Ashoka Buildcon, some movement in the last few minutes of trade, but those sharp moves are few and far in between at the broader end of the spectrum. It's essentially restricted to the large cap space. Bajaj Finance is up a whole 10%, 2290 and counting. Would you buy Bajaj Finance at these levels?
Yes, Neeraj, I think
at these levels.
Yeah. So I tell you,
after the 10% move.
Yes, absolutely. So reason being, we keep comparing book values, and we say that globally the book values for lenders is 2 times, 1.5 times. I was comparing Wells Fargo 10 years with Bajaj Finance. Also, again, not an apple-to-apple comparison, but since global benchmarks are used now to define the attractiveness, the asset growth is about 5% in last 10 years. Bajaj Finance has an asset growth for last 5 years, a CAGR of 36%.
Yeah.
And the management says that next 3 years, and my NIMs are 10%. My return on assets are, the highest in the industry. So I think, a model like this will command premium. And the broader thing, I think, if you look at the savings pattern in India, there's a dramatic shift there. We were at 25-26% savings about 5-6 years back, 7 years back. We are now probably lesser than 20, and now so we are seeing a credit-driven consumption kind of a story playing out. And I think Bajaj Finance, with all this crisis in NBFCs, the better ones are going to emerge out stronger. Always happens.
Yeah, but would you pay it 7 times book? And in a scenario wherein some of the, or 6 times book, let's put it. Actually, I would argue it's probably about 6.5, 7 times book, right?
Yeah.
Would you pay a 7 times book for a player when some of the others are which were at 3 times are now probably 2 times or thereabouts?
See, relatively, I don't see a model comparable to Bajaj Finance in the NBFC space. So if the model itself is, I'll pay a premium. But as I said, my underlying thing, if they can grow assets at 30%,
which he said yesterday.
Yeah, which I think, so I'll be comfortable doing that. And if you get a 20-30% price correction in a quality name, you will gradually, add that in your portfolio.
Probably a similar comparison to the mid-cap IT names that you yourself had pointed out some time back, whether or not you would invest in a persistent risk gone down from 13 times to 11 times versus the Mindtree, which is still trading at those elevated P multiples.
Yeah, so, again, the question mark about valuations all the time, but somehow across the board you see people very comfortable buying Bajaj Finance. And the management commentary yesterday, what I quite frankly liked about that commentary to us yesterday was that the management saying that we are not going to go out and grow more aggressively because there is an opportunity. We'll only grow at a pace that we are comfortable with.
Yes.
And in fact, if we are not comfortable,
in the risk,
we will come off as well. Which just shows that the management is not out there just trying to grow the book fast. They want to do at a manageable rate. The stock is doing really well today, up about 10%. As we speak, Bajaj Finserv, probably because of that SOTP valuation that gets embedded into it because of Bajaj Finance's holdings, has also moved up about 4% because the numbers at Bajaj Finserv were left a bit to be desired. But do you trade them, Manav? A Finserv, we all speak about Bajaj Finance. Finserv has had a good move intraday today. Would you trade it?
Yes, in fact, when we are looking at the chart of Finserv and Finance, both of them are showing a similar structure whereby the Finserv also after a decline is bottoming near its important long-term averages and has important intraday support at 5,300 levels. So, if someone wants to take a bet of or 2% on the lower side just to gauge the momentum, I think it's all done because the volumes, when we look at the volumes also, very high volumes in last two trading days, clearly indicating some sort of a reversal, at least on the short-term time frame. So, I will not be surprised to see this move carry forward. Even you can see some further more upside legs. So an upside of 5-6% will definitely not be ruled out into this.
By the way, just want to mark one stock and 2 stocks. One of them, my producer pointed out, Sonata Software has lost quite a bit in the last few days. But on news, Cadila Healthcare is down about 6%. And I think it all stems to the conversation that the management had with us wherein they said that for this asset, they might be a combination of them putting in some equity as well. And that is not something that would have sat down well with investors, I reckon, because the stock is trading at the lowest point of the day on volumes which are higher than the 20-day average as well, Devina.
That's the stock volumes of 2.25 million on Cadila at 354. The other one is Asian Paints, and we just spoke to Harith about the sector as a whole. Asian Paints is up about 4.5% right now, closing in on the highest point of the day, 1190 on the stock. Yesterday the stock was down 6%, but today I guess the overall market mood itself is a bit more accepting. So looks like the stock has seen some amount of buying at those levels. Amar, Asian Paints?
Yeah, looking at Asian Paints, it seems that at least Asian Paints now definitely has a respite, and the low that it had made yesterday, 111,118. Now that should act as a very crucial support, and it could also be a short-term bottom for Asian Paints. But what we need to remember is that Asian Paints, from an intermediate-term perspective, it is still, I would say, on the sell side. Long term is strong. That's the reason the stock has bounced back. And the levels that one needs to watch out for Asian Paints, I would say, on the upside is 1250, 1260, because that's a crucial resistance zone for Asian Paints. But yes, if 1100 levels hold, then the stock could witness some decent upside.
All right, Gurmeet, one last question before we let you go on, how exactly are you approaching the earnings season now, whatever's left of it? And amongst the mid-cap IT names, I think Mphasis is the other one to watch out for. What is the anticipation there?
So as far as the broader indices goes, we are seeing there's also some low-hanging fruits which we are advising clients to latch onto. So if you see today, on the debt side, your repo rate is 6.5%, and your 6 months CP/CDs are at 9%. So that's 2.5% spread between your overnight rates, and doesn't stay like that. It's usually about 70-80 basis points. This is actually more than 2013 levels. So we see the spreads compressing when the normalization returns. So if you get into an ultra short term kind of, or you buy some CP/CDs, you get a 9% kind of a yield with a possibly 1.5% capital gain. So that's a low hanging fruit. So you're not really asking investors to get into an index and take a call on a particular index, whether broader indices or banking. And we prefer large cap IT over mid cap IT, because as I said, the valuations are same. We see a deal win momentum in lot of all three big which have given results: TCS, Infy, HCL. The BFSI vertical is contributing. For HCL, the infrastructure is contributing, and the cloud and the digital part is also doing fairly well. So prefer large cap IT over mid cap IT.
All right, got that. Gurmeet, we'll let you go on that note. Thanks so very much. It was a pleasure having you in the studio. Well, on that note, it's time to take a short break on Countdown. On the other side, we'll get you the list of Fab 4 stocks of the day, and at 3:15, we'll tell you what dealing rooms are recommending. Welcome back. 26 minutes left to go for market closing. Let's quickly take a look at what the indices are doing at this point. So after briefly once again breaching the 10,200 mark on the upside, we've sort of tapered off from there, but just closer to that region. 0.5% higher on the Nifty. The Sensex is up 1/3%. Nifty Bank is also up about 1/3% currently. M&M Financial is up about 7%, so that's a strong move on the counter this afternoon. RBL Bank is the other one. Strong show. The stock's up closer to 6.5%. Repco Home Finance, that's up 4.5%, almost 5%. Apollo Tyres is up 4%. IGL is up 4%. Siemens, Indiabulls Real Estate, Voltas are some of the other names that are showing you some good gains in this afternoon's trade. But before we move on and talk some more with our guests, let's find out what has made it to Nikki Mirchandani's list of Fab 4 stocks this afternoon. Good afternoon, Nikki.
Hi, Devina. I'm going to start off first with Tata Metallica, where the company has reported good set of numbers. It's going to be a 9.5%, 10% jump there. Top line growth is almost 20% uptick. On bottom line, it's a 40% uptick. And operational performance of the company has risen more than 25%. Second in the list, we have Bharti Airtel, where the company has decided to be raising around some $1.25 billion by selling off the African business. And you have the global investors like Warburg Pincus and SoftBank investing into that. Third in the list, we have OMC, the HPCL, which has risen as much as 8% in trade today on back of falling crude prices. Fourth in the list is Oberoi Realty, which is up for third consecutive session in a row after reporting good set of numbers. Back to you guys.
All right, Nikki, thanks very much for that. Amar, M&M Financials at 400 right now?
Yeah, looking at M&M, if I look at M&M Finance, what I see here is that this stock has bounced back, and there is some bottom formation for this particular stock, because in the first week of October it had made a low around 350, and it has bounced back, and also there is bullish divergence on the daily charts. as well as the long-term trend. I would say the long-term trend also pointed out very strong support at this for this particular stock. However, what I see is on the long-term charts, that is the monthly charts, it has upside resistance coming around 420 levels or so. So that could be a level where one could book profits, and from where we could witness some selling pressure coming in this particular counter.
All right, Anand Tandon also is joining us on the show right now. Anand, how are you approaching the market currently in terms of the overall perspective, and how should one position themselves?
Well, if you are looking at the very short term, because we are getting into the expiry week, all kinds of gyrations can be expected. And given that the near-term market looks oversold, it's quite possible that you may see a bit of an upside. However, I would still be a little circumspect on the overall scenario. I think while there has been some improvement because of the erosion in oil prices, I don't think that we have seen the worst yet, and it's very likely that the oil may perhaps go back a little bit up again. More importantly, the earnings will likely deteriorate a bit because of the kind of feedback that we are getting in terms of the near-term festive season, especially on the consumer discretionary side. So overall, I think the market at an index level still looks somewhat expensive.
Yeah, and frankly, just look at the way the market is bifurcated between pockets. So while Bajaj Finance is doing what it is doing, RBL Bank is doing what it is doing, it's up 6%. Edelweiss is still down about 5% in trade today. That's the third top loser on the Nifty 500 on a day when the market seems to be largely okay. Emphasis is still down about 4%, but essentially I was trying to bring out the bifurcation between the financials names. So Edelweiss, Yes Bank, etc. continue to grind lower, whereas some of the likes of Bajaj Finance, etc. have gone up in trade. Anand, the numbers from the cement pack thus far have not been encouraging. The commentary or whatever little we've gotten out of it from at least the top 2 out of the 3 cement players doesn't quite paint a really rosy picture. Ultratech may have sounded slightly positive, the others quite haven't. And we haven't even gotten to the mid-sized companies as yet. Would you stay out of the picture right now despite this whole promise of infrastructure?
Well, if you look at the infrastructure stocks themselves, they have been sulking and very badly. So clearly all is not well with infrastructure. That said, volume growth does seem to have come through, even in the cement business. I think it remains a very regional market. Large, broad brush upside is not likely. However, Central India does seem to be doing a little better. So there may be a few smaller companies. We'll have to see how the results come through. But those which are based in Southern India, Central India, should have been able to take some price increase as well as increase in volume. But at a macro level, clearly the numbers are not very exciting, and price increases will still be some distance away.
Anand, what's happening with some of these brokerage stroke diversified financial services, the likes of Edelweiss, Motilal? There's been a continuous fall now. 5 straight days of a sharp correction for Edelweiss. It may have bounced back till 180, 185 recently, but it's come off very, very rapidly. Motilal is sub 600. I think IIFL Holdings hasn't had the best time either. Why is the market so circumspect about these names? Because the housing finance names have bounced back, but somehow names like Edelweiss and Motilal aren't.
So there are 2 issues here. One is, of course, if you look at the brokerage business, that is obviously going to be in a bit of a down cycle right now. With serious losses being made at the retail end, it's very unlikely that the volumes are going to pick up. And obviously leverage has been cut as well. Most brokers would have pulled back some of the money, given that their NBFCs are somewhat strained in terms of liquidity. So that part of the business anyway will take a while to recover. The NBFC part of it is a different issue. As you are aware, there is a liquidity problem with NBFCs, and except for Bajaj Finance, which has gone ahead and said that they will still grow 35%, I think many of them will find it difficult to grow for the simple reason that they'll either be selling off some of their portfolios to raise immediate cash, or the mutual funds are unlikely to roll over the CPs, and CPs make up almost perhaps just under a quarter of the total balance sheet of the NBFCs in general. The difference between housing finance and NBFCs in general are that at least housing finance has assets which can be pledged or sold against. whereas typically consumer finance loans are a lot more difficult to get rid of, except by securitization, and there isn't much time to do securitization right now. So I think, even if you were to assume that the RBI or government finds a way to ensure that there is a window to provide liquidity, what will you provide the liquidity against on the asset side? That is a question that I think will bug many of the non-housing finance NBFCs. That said, most of the smaller housing finance companies also have a negative ALM, so that's going to be a problem as well in the near term. So if you have to be investing, I think the stable way to do it would be to look at the larger housing finance companies, or perhaps look at only the banks where this CP business is not an issue at all.
Yeah, as I said, these stocks, at least the brokerage names are getting clobbered as if there's no tomorrow. I mean, I think the only difference, viewers, and something I believe Anand Tandon will concur with me, maybe I'm wrong, maybe I'm presuming too much, but to have a conversation about how, for example, I'm using Edelweiss as a barometer, that Edelweiss was at 315 and now that it's fallen to 135 and therefore it's cheap and reasonable. That may not be the valid argument because you don't know what the actual value or the value of the stock was. It may have gone up to 315, but that did not have been the right value in the first place. Anand, the business models are not shutting down though. Do you reckon that at these levels, or maybe once the fear dissipates a bit, there could be some value buying that could come in? I mean, and again, I don't know where is value within these companies, but do you believe some value buying could come in? If not now, then maybe 10, 15, 20, 25, 30% lower?
Well, at some stage, certainly these are not companies that will disappear. But that said, as you pointed out, they have also gone to stratospheric levels. If you were to look at most of these NBFCs, have probably doubled in the last 1 year. There isn't that much which you could justify as a kind of business increase to justify a doubling of the share prices. So, if you've given back much of the euphoria, I think that is only a good business. Now, the real question is who will be the ones that will come out of it without any issues in terms of being able to do repayments and so on, and who can continue to grow. Even if you assume that there is some reasonable growth of 10 to 15%, the valuations of 5-6 times book value just don't sustain. So, you would get back to a more sedate, perhaps 1.5 to 2 times book value for some of these NBFCs, at which point there would be definitely companies which you want to have in your portfolio, because overall the growth continues to come through, especially on the consumer finance side.
All right. Manav, do you have a call on any of these NBFC / brokerages?
See, looking at the chart for Edelweiss, since there was already a discussion going on, when we look at this chart on a weekly, monthly perspective, there has, the stock has breached decisively the crucial support levels and the structure of the stock has changed. So even though if there is a bounce back from the current levels towards the levels of 160, 65, the question is whether the stock will not see any further selling pressure. So at the moment, the only scenario is if somebody who is very aggressive and wants to play on the long side only, since the stock is in deep oversold levels, maintain your strict stop losses, or else I think there are better stocks to be invested in. We had already discussed in stocks like, there are good NBFC stocks at oversold levels, stocks like Canfin Home, which is forming a good base, there are good volumes built up, and even DHFL. So I think if I have to take a bet, I would rather go for those stocks. But in all NBFCs, I recommend strict stop losses because of its current volatility.
All right. Emphasis has recovered from the lows of the day. So stock was down about 7% in early morning trade. Sub 1,000 now is once again making its move on the upside. It's 1,027 for Emphasis. We'll talk about that and more. But time now to bring in Darshan and Yatin to take us through what they've been hearing from dealing rooms this afternoon. We'll start off with you, Yatin.
Well, Devina, in general, the activity is quite volatile. Dealers are, usually staying away from big trading positions. Adani Port also, they reported a strong second quarter, slightly above the street expectations, and despite that gap up opening, we have the stock which is quite weak in trade. So dealers do indicate that at higher levels, domestic funds are sellers in trade. In fact, it is almost 15-20 rupees just away from the 52-week lows that it made recently. So Adani Ports dealers are recommending selling on higher levels, and do watch out for Bharti Airtel. Okay, that stock is up 12%. When I was speaking to a few dealing rooms, the stock was up 4-5%. So good gain coming in for Bharti Airtel. Dealers recommend a BTSC strategy. based on F&O trends. But Darshan has a few more stocks to talk about.
Yeah, so one of the counters which came out with numbers today is Jubilant Foodwork. It's absolutely flat in trade, no surprises as far as number is concerned. But there are concerns on growth now, given everything came in line. So there could be muted selling pressure to the muted Q. MCX is another counter which is up almost 12%. The NSE deal buzz is very, very ripe in dealing rooms, despite a strong number and nothing coming out of there. Remember, the board meet of NSE will happen in a couple of days. So the buzz in dealing rooms is very strong of a potential deal between MCX and NSE. And Oberoi Realty is one of the very few real estate counters which has managed to do well. Of late, real estate has been doing well. Oberoi Realty came out with strong set of numbers, again up 10%. Some of the domestic funds are accumulating.
There's sharp pullbacks out here. Darshan, thanks a lot for that. Sorry, I don't know if you wanted to refer to a stock, but the one that
the market in general is pulling.
Okay, yeah. So let's start with the market. That's the bigger one. It's that close to 1% up as well. But Devina, just look at the gains. I mean, Bharti Airtel in a matter of 5 minutes has moved up from being up 5% to being up 10%. Look at that spike. Bajaj Finance is up 12%, 2331 and counting. OMCs have stayed steady. Asian Paints is up 4.5%. The big boy Hdfc is up 3.5% in the session today. There's some strong moves here.
But if you'd actually look at the market itself through the morning, I mean, it's actually in this range gone up and down quite a few times. So for an intraday trader, it might actually have been very volatile time to take a call on the index per se. But yeah, making that approach under 10,200 once again, now climbing back towards that 10,250 mark. But looks like at the end of the trading session, the mood seems to have turned around from where we started off the show, because when we started off the show, the Nifty was absolutely flat. In fact, it just marginally moved into the red, and now we're once again trying to approach the highest point of the day. And that's probably something that we discussed with Manav at the start of the show itself regarding the pickup on the index, taking support of that cluster, Manav.
Absolutely, and in fact, when if you just look at the charts right now, we were minus 20 points and we are right now at plus 85. The index has formed a bullish hammer formation. I think by the EOD that formation would be completed. What it clearly justifies a very sharp reversal from the lows, and it forms a very big lower shadow, which further confirms and gives a bang on. Okay, now this is a short-term bottom in place, so it's adds another further confirmation to us. And the highs, once if it is crossed, you will see further short covering coming into the system.
In fact, should pull up the turnover to see how the volume picture has been shaping up, how the turnover has been shaping up on the cash as well as on the F&O side. So, a pickup ahead of expiry, you are going to be seeing that number, but it's relatively high for a non-expiry day. It's at 12.77 already. We're still about 10 minutes left to go for market closing. NSE cash also around 31,640. You'll probably see that number somewhere closer to 32.5 or so. BSE cash though slightly more muted.
Yeah, well, a bunch of those stocks. Just before we get in closing strategies though from our experts, one more set of stocks that I do want to highlight. We've spoken about the gainers. Yes Bank as a stock has lost out quite a bit over the last few days. And then there was a brief rally. I'm not asking for a buy or a sell here, but there was a brief rally in Yes Bank from those abysmally low levels of 170, 180, where it will be trading at at valuations that it hasn't traded for a really long time, in the hope that there could be some extension. Now that it's out of the window, do you reckon that these valuations are where Yes could grind until the new management comes in, and if there are skeletons that have to come out, will come out, and the market will know about them?
Almost definitely. I think typically when you do have a management change, and that too if somebody were to come from outside, it's very likely that there will be a bit of spring cleaning that will happen to the portfolio. Especially considering that the current management, especially the current CEO, has been holding on to the bank for a very long time and has been driving the growth personally in many of the marquee cases. So there would be some things that may have to change there. Once that is out of the way, given the fact that it's a bank, obviously, probably it will come back into the picture in terms of investments. But as of now, I think for a corporate-facing bank, you're probably better off looking at an ICICI or a State Bank, or maybe even an Axis Bank.
Okay, let's take in some closing strategies first from our experts. Aman, to you first, your top closing strategy.
That one can look at TCS, which I had talked about earlier as well. So TCS is one stock. There is a possibility that the stock can bounce back from the current levels. So one can buy TCS with a stop loss of 1809 and a target of 1937 in the short term, because the stock has taken support around crucial levels. So there is a possibility that there could be short covering in this particular stock.
Manav, what about you?
I have one stock which is Hdfc Limited. You know, the prices have seen a very good bounce from its oversold levels, and it has formed a double bottom formation. For the immediate basis, yes, definitely the stock can see a good run up of another 3-4%, but I will not be surprised to see Hdfc back to the levels of 1850. So one can maintain a stop at 1700 on the lower side.
Okay. You know what? We're finding some other names and in different names moving up as well. Pull up EID Parry and see what that one is doing in the session today. Should come up on your screen. That's one up about 6.5% and good moves there. Wonder if the other sugar names have done well too. Balrampur Chini, not just marginally higher, not so much. So it's not across the board. It's just that EID Parry has those specific moves to itself in the session today. I've been impressed with this whole ethanol and the sugar program, Anand. Is there merit in owning this space or trying to own this space?
Well, given where we are in the market right now, I think it's probably too small a sector to worry about. You're probably better off, given that there has been a severe price erosion in many, marquee sectors, to look for opportunities there, because that's where the big moves will come whenever the market turns.
Okay. Let me ask you then about mid-cap IT. The stocks have come back to some bit of normalcy after stratospheric valuations again. It was par for the course correction. Can there be more, or do you believe that growth numbers justify being at in or around these valuation multiples? Mid-cap IT in particular.
I don't see much downside from here for many of them. I think the corrections, wherever the results have not been in line or along expectations, have been fairly severe and are pretty much reflecting whatever is known currently. And by most counts, it would appear that the business environment has improved. And of course, there will be an improvement in terms of the currency. So looking out over the next 12 months, I don't find that the mid-cap IT is either particularly expensive or particularly challenged in terms of growth opportunities. I think you will get somewhat, early double-digit kind of growth numbers for the most part. And the valuations are reflecting that. So again, not great reason for it to go up, but if the market were to move up, I think these companies also will move up in sympathy.
All right. Anand, anything in particular that you're liking?
Well, there appears to me a lot of value now in some of the small cap companies, but given where we are in terms of the liquidity constraints, I think that they will not particularly perform, at least in the near term. I think what we really need to wait out for is to see how the NBFC issues pan out and whatever RBI can do to ease off liquidity. If and when that happens and there is no further negative in terms of the macro, that would be the time to buy. Remember, we still have too many other shocks waiting, both political and economic. So there is no particular hurry in my view. These kind of up and downs, because of the fact that we are in the last stage of the expiry, should not suddenly mean that you have to turn bullish.
All right, got that. Anand, we leave it at that. Appreciate you taking out the time and joining us on the show this afternoon. A few other names that are holding steady include the likes of an REC, which is up about 4.5%. Shriram Transport is up 5% in trade right now. Then you've got the likes of a Bosch, which is up 4%. BHEL is up about 3% and HCL Tech is up about 3.5% as well. Manav, you tracking HCL Tech at 985 right now. I mean, just a few months back, it was closer to about 1100 odd, came off from there fairly quickly.
See, the prices have actually recently declined and tested its important crucial support levels. We have seen, often when the prices test its long-term averages, there is a good short-term pullback that eventually takes place into the stock. The stock has been in a very good long-term primary uptrend. So an important support, as long as 950, 960 levels are held, I think the prices would regain and test the levels of 1050 once again. The volume built up even at the current levels are indicating that at least a short-term bottom could be in place. So one can look look to initiate long positions. Also from the IT space, I think Wipro is one stock which is likely to see much more of an outperformance. The stock has seen a good breakout on the weekly and the monthly perspective, and the trend is still intact. So I sense another 10% upside, but if I have to pick one, I think Wipro would be the pick from the IT space.
Keep in mind, Wipro has results coming out, so that's a bit of a trigger that you need to monitor. A stock that's bounced back, and Amar, I want to come to you on Dish TV. Sharp up move in the last few minutes of trade. What do the charts look like?
Yeah, looking at Dish TV, if you look at this particular Dish TV, the stock has been on a significant slide from almost 70 odd levels to currently trade around 44. And technically, I would say that on the weekly charts, it continues to be extremely bearish. Even on the long-term charts, it continues. So this is just, I would say, a temporary respite for this particular stock. I wouldn't at least be interested in buying this stock.
Manav, just one quick question. The real estate names, Godrej Properties, Oberoi Real Estate, how do the charts look?
See, if you're looking at the chart, Oberoi definitely stands out. The stock has seen a decline from the highs of 610 levels and has tested its long-term averages. Most importantly, the last 3 days have seen very good volumes and the price breakout, which is indicating that the short stock is, seems to be bottoming out, at least on the short-term perspective. Once if the stock manages to sustain above the levels of 420, we will eventually see the levels of 465 to 480. So if I have to pick something, I think definitely Oberoi stands out even at the current levels, has important support at 415 on the lower side.
Okay, stay on, gentlemen. We'll take in final thoughts from you, but here's how the markets are shutting shop today. Quite the contrast to what was happening in trade yesterday, but in the green and trading in or around the highest point in the last 5 hours, at least, if not the day, because we started off about a percent point one higher, but doing okay for ourselves. The Nifty Bank about 0.5%, not bad too, and the mid caps and the small caps about 1.5% apiece. So good market breadth today, and the latter half of trade, especially the last 2 hours, have been fairly kind to us. So Devin, I'll bring you up to speed with what's happening at the mid cap end of the market. Let me talk about the large caps, and well, good strong gains. It looks like the mid cap index, but it isn't. It is the Nifty. Bajaj Finance 11%, Bharti 9.5%, HP, IOC, BPCL all in the green. Some gains for Hindalco and Asian Paints too. Bajaj Finserv about 4% higher, Hdfc about 3% higher. So good gains here for a clutch of these names. There are losers though, by the way. So Bajaj Auto, result reaction down. Yes Bank, the disappointment continues. There's some weakness for Adani Ports after the numbers and the small miss. And IT continues to remain on tenterhooks. Infosys still down about 1%. Wipro just about breaking into the green. The other is also fairly lackluster. So there's a bit of pain in IT continuing in the session today, but all in all, a day of gains. And similarly for the mid-cap space as well, Devina. NBFCs out there, a clutch of other sectors out there, lots of gainers.
Well, in fact, like you said, NBFCs actually are ruling the roost right now from the mid-cap and the small-cap space. Canfin Homes being one, just want to quickly highlight that. One on the back of numbers as well. The stock has done exceedingly well in today's session. 12.5% higher for Canfin Homes at 249. Not just that, even a Repco Home is up in the same light. So both these stocks have done exceedingly well today. Repco is up closer to 4.5%. Within the real estate pack, it was a surprise move from Oberoi Realty. Remember, the numbers were exceedingly good, and yesterday's session saw it move up closer to 3.5–4%. Today you saw a big surge of 10% on Oberoi Realty, taking it to 435. Group Finance and M&M Financials, again in BFC pocket, are up about 7.5 to 8%. M&M Financial closer to about 7% at 400. On the other hand, Jubilant FoodWorks that reported its numbers, not very exciting. So towards the end of trade, the stock ended lower by about 0.6%. RBL Bank from the mid-tier banks did well for itself in the afternoon session, 5.5% higher. Other disappointments in terms of results, Assassin Technologies, that's the stock which saw a cut of closer to 13.5% by the end of trade today on disappointing numbers. Emphasis is still yet to come out with results, the stock still ending, and the entire IT pocket seems to be out of flavor suddenly, down 4.5%, but still not at the lowest point of the day. It was down 7% in early morning trade. Cadila Healthcare is also down in the session. By the end of trade, is 5.5% lower. Edelweiss is down in the session. You've got RAC and Avenue Supermarts as well. Two other stocks to watch out for as we short trade this. Edelweiss, in fact, picking up from the lows of the day, so a sharp pullback towards the end of trade. Not a close for trade, but yes, by the end of it, Avenue Supermarts 3.5% higher, and Edelweiss pulling back and ending in the green. But overall, Neeraj, it's the pickup in the turnover and the trend reversal that we saw actually just the last 40-45 minutes of trade.
Yeah, it's been interesting, and actually since Devina spoke of the turnover, let's get the turnover first up on your screen, and you will see that the F&O turnover is certainly substantially higher than what we see usually on a day like this.
Yeah, 13.5, almost 13.5 lakh crores. Even on the NSE cash, 33,600 odd crores. Remember, this is not the expiry day, so for a non-expiry day, this is on the higher side. But we'll wait and watch. Hopefully, the rollovers would have also picked up on the index futures. But let's quickly take a look at what the broader markets in the market. Breadth should come up on your screen. A significant amount of movement throughout the day as it had its peaks and troughs.